You're listening now to the Real Estate Lab with Bayut. Hi, and welcome back to another episode of the Real Estate Labs with Bayut.com. Today I'm joined by Gino Cross, the managing partner of Strada Real Estate. First of all, welcome.
Thank you very much.
Good to have you on board.
Good to be here. Thank you very much.
Yeah, first podcast?
First podcast with you guys, yeah.
Okay,
Yeah.
So you're not new to this.
I don't know, I'm a little bit nervous.
So Gino's from Strada Real Estate, who are a relatively fresh company or agency to the market. They've been open for roughly about 18 months now. First I want to know is, why Strada Real Estate? Why did you open up? And how's things going so far?
Things are going really, really good. We've grown really quickly. I'm actually not one of the founders, so you've got three of us, Che, Gary and me.
Okay.
The boys started off initially founding the company. I had a different company which I ended up selling.
Okay.
And there was a gap in the firm. My background's off plan.
Okay.
Fell in love with the marketing, the branding, worked with the boys before, we're doing deals when we were brokers. And it made sense. So I joined, bought in, and
Fantastic.
Rest is history.
Good. So just sort of touching into today's subject, we're going to look at the investor market here in Dubai. Obviously, with you now looking after secondary and off-plan, you should have some nice insights for us to go over. Whilst we're on that subject, what are the sort of trends which you're seeing at the moment in terms of the investor market?
In terms of what are we seeing people, what preference do people have?
What preference do people have? What type of investors do you see coming into the market at the moment?
To be honest, there's all different types of investors. It all depends on the client, really. It depends on the amount of money they have, how much they want to invest, why they're investing. You know, some people are coming over with a portfolio from the UK, so they're used to much smaller yields. So they're really happy with a 4, 5, 6% yield versus a 2 or 3% in London.
Yeah.
Some you've got that have been here for years and years, very confident and comfortable with the market. They want the flip. You know, buy and sell. You've got some that are renovating and reselling. So we're actually we're dealing with all different types of investment at the moment. Yeah,
it seems that the renovation thing has really been kicking off.
Yeah.
If you look at Emirates Living, such as Springs, old villas, but they just seem to be getting ripped out, refurbished, and they look immaculate inside. Some of these villas are doing some really good jobs. When I bought my apartment last year, I struggled to actually get a company to come in and do it. They were just booked out for the next 12 months or so. So it seems that that's a really strong market, buy old. A lot of people tend to buy older buildings now as well. That's what I've done, is buy an older building, bigger square footage, and then just rip out and make it my own. So you see a lot of that.
That's exactly what they're doing it, because if you're looking at something, take downtown as an example, if you're buying something that's just handing over now, the size of the apartment is a lot smaller. Whereas you're buying something in an older building, 5, 6, 7, 8 years old, like you said, the square footage is so much bigger, you get so much more space. It makes sense to buy that and renovate it to your own standard, much higher standard.
Do you see any developers making a conscious effort with regards to space these days?
Yes, there's been a few in Dubai Hills recently, new launches. They've deliberately made a deal of actually saying that the space is a lot bigger. I think a lot of the Europeans are coming over at the moment, right? Big investors and buyers are from Europe, and the Europe market is traditionally a lot smaller, the square footage. So a lot of people are used to, the Arab market, because they've got big families, they want big spaces. But now people are comfortable with smaller apartments as well coming over. That's what we feel, what we're seeing.
Yeah, okay. So Gino, Dubai has a variety of different property types, from residential to commercial. Where do you see the real interest is at the moment?
We're getting inquiries on both. Again, it goes back to the client, right? An investment is such a broad statement, like what kind of investment do they want? So it depends on their risk appetite, depends on their budget, depends on what type of investment they're looking for. Commercial, we've seen there was a flip where you can take a floor, dissect it into smaller offices and sell it, or rent it out, gives a high yield. Whereas, like I say, with the residential, you've got renovate, resell, you've got buy off plan, hold, sell on handover, rental income, furnish it and put it through an Airbnb company, short-term management. So there's so many different options. It depends on the investor, really.
Do you guys focus on short-term?
We work with a couple of companies that
Okay,
that,
so you,
we don't have anything in house.
Okay, do you still see that market as strong as it was
Yeah.
maybe last year?
Yeah. It is. It's quite saturated, but I think like anything, right? It's like a brokerage. As long as you're working with the right company, the right brokerage, you're getting the right results.
So when it comes to investments and yields, what can investors expect from the Dubai real estate market?
All the answers are going to sound the same. It depends on the type of investment you're doing, but it depends on the area, but you can get anywhere from sort of 5 to 6% on a long-term, steady, safe investment net, or slightly higher risk, go more the 8 to 10% in short term. And then if you're renovating and reselling, you can reach returns of 20-25%.
Yeah,
we've seen. Yeah, it depends on the area, depends on the purchase price, but yeah, we've seen that.
Okay, and if you were to invest in a property right now, where would you be looking?
If I was to invest, I would. I actually quite like JLT.
Yeah.
Yeah, I don't know why. I think they're low entry point, quite safe. They short term really well. They long term really well, as long as they're renovated correctly. That or a villa community. We've just bought somewhere in Victory Heights. That was supposed to be a family home, and might end up turning into
spacious as well, yeah.
Yeah, really spacious. Yeah,
next to the golf course.
That's it. Yeah.
Do you play golf?
Yeah.
So Gino, in our latest market report, Dubai Marina is leading in terms of luxury apartments, whereas Arabian Ranches is leading in terms of luxury villas, with an average of 46% returns ROI. Why do you think that the luxury market in Dubai is attractive in comparison to other global cities?
I think the purchasing price, although the market is up, it's gone up from COVID times. The price per square foot, if you compare it to other cities, you compare it to London, New York, Tokyo, you're still way under what they're asking. So the rents are fairly similar. If you can compare anywhere in West London, the more expensive sides, I'm using London as an example, so from there, the rents are similar, but the price point is very, very different. So that's why it's giving the higher yield, I think. Okay,
so I just want to touch on new investors to the market. What type of advice would you or you guys give them? Is there any specific areas, communities where you would advise them as a starting point? Would there be any specific beginner-friendly locations that you would consider?
I think the biggest advice, although I'm going to contradict what I just said, someone bought a garden home without being here. If you're a new investor, start small. That would be the biggest advice. Start with something like, it depends on what type of investment you're looking to do, but a 1-bed, 2-bed in one of the demanded areas, Marina, downtown, Dubai Hills. It's a safe investment. If you're trying to buy something off plan and flip it before the handover, it's high risk. High reward, but high risk, I would stay away from those sorts of things. Yeah. If you're going to buy off plan, stay with a reputable developer, the larger ones that build a community, so it's a safe investment, and go for a 5-6% yield, stay safe. That's my advice.
Right, Gino, I don't know if you've seen the last few episodes, but marketing are forcing me to play these games, which I rather enjoy. Today's game is Would You Rather. Okay, so I'm going to pass you this and I'm going to ask you a couple of questions related to real estate, obviously, of Would You Rather.
Sounds good.
Okay, Gino, I'm going to ask you the first question. Would you rather invest in a to-let apartment in
downtown or Business Bay? I would invest in downtown. The reason being, it's an email community.
Okay.
So you know what you're buying into. I would invest into an older tower, like we discussed earlier, slightly bigger, make sure it's got a view, renovate it. That would be my preference.
Okay, question number 2, Gino. Would you rather invest in a luxury high-rise apartment in location A or an affordable townhouse in location B?
We've got here Marina and JBC. I would go with Marina.
Okay.
The reason being, although I really like JBC, I'd go with Marina because I love the Marina view. Feel like it'll warrant a higher yield. So I'd buy something and rent it out short term to holiday makers. Okay,
question number 3. Would you rather, Gino, invest in
commercial or residential? For me personally, always residential. I know more about it, more comfortable with it. and there's a few different options. I would say renovate and resell, or furnish it and give it to a short-term management company.
Okay, moving on to the last question. I don't really know how this answer's going to go because you're used to working off plan, now you're sort of in secondary, so I'm not too sure where you'll be swayed. But would you rather buy
off plan or ready properties? I would, it depends on the strategy, but I would rather buy an off plan unit without a mortgage, obviously take the interest free payment plan, pay it until handover and then sell it on completion. That would be my initial strategy.
Just a question from me.
Yep.
This wasn't a pre-prepared one, but just you used to sell off plan. What would you consider to be the best story in terms of where the price started at to what you can now sell that for now?
The one that springs to mind is a 2-bedroom apartment in Beachfront in Beach Vista.
Okay.
It's a long-term client of mine. We worked together and bought and sold a lot of properties. I phoned him at the back of lockdown. Email launched a few units and told him to buy it blind. It's a podium level unit. It was facing the sea, and podium isn't normally that demanded. We bought the unit for 2.6 million. When it handed over, we went and did the walkthrough and the snag, and it is one of the best units I've ever been in. You open the door and it's blue. The whole thing's blue, floor to ceiling windows. That unit now is valued at 4.85 million.
Wow.
Yeah, and we furnished it and we're short-terming it at the moment. It yields about 30k a month. So yeah, it's really, really good investment.
Oh, fantastic. Well, firstly, I'd like to thank Gino for joining us here today. It's been a great conversation, very insightful. Thank you for coming in.
Thank you very much for having me.
We need to get you on again
fun.
sometime.
Definitely.
And a round of golf.
Yes.
I'd like to thank everyone for watching this episode again. If you have any questions or anything you'd be interested in seeing on the Real Estate Lab, or you'd even like to be on the Real Estate Lab, please reach out to us or leave a comment at the bottom and we will try and make that work out for you. Thank you once again. Thank you to Gina. Thank you to Strada Real Estate.
Thank you.
And take care. We'll see you all soon.
You're listening now to the Real Estate Lab with Bayut.